Hello everybody, welcome to the Investing Education channel again. So today I'd like to talk a little about skin in the game. I think that's very important, especially if you're talking about stocks. I think it's very important to have skin in the game, meaning you actually own the stocks, and I think that's so important because that's not what you see, on TV a lot. Many of the analysts we see on TV actually, they talk a lot about stocks and they come up with a lot of arguments sometimes for and against the stock. But if you look into their, their disclosures or into their holdings, they may not even own the stock. Or if they're very bearish in the stock, you expect them to sell the stock. I mean, I don't expect people to be short sellers because I don't recommend that myself. But if you're very bullish about a stock, I expect you to hold it, right? It's because you should put your money basically where your mouth is. So, that's one of the purpose behind this real money portfolio as well. It's basically to show that, I have skin in the game. I actually own the stocks that, I talk about. I think it's very important because, you actually feel the pain when the stocks when the stocks decline, and you feel the joy, of course, when the stocks gain. And of course, you take your stock picking much more seriously that way. You're not just writing long articles and coming up with fancy arguments or fancy technical analysis, and then in the end you don't really have a position on the stock. I can understand for some beginners they may not have enough funds, but I think for the vast majority of people, they seem more interested in writing about stocks than about owning the stocks. So I think that's a pity. So anyway, that's one of the reasons why I started this channel, basically, so that you can see someone with real skin in the game. Another thing I see a lot is in terms of hedge funds, and I think a lot of hedge funds don't have skin in the game either. Of course, Warren Buffett is an exception. 99% of his money, I think, is in Berkshire Hathaway, and that is really the kind of skin in the game you want to see from from a fund manager, from an investment manager, basically. If Berkshire Hathaway goes down, Warren Buffett feels the pain the most. And of course, he has his family's money in it as well, and Charlie Munger has his money in it as well. And it shouldn't just be about investing other people's money, and that can sometimes lead to the tendency to gamble. So when your money is at stake, that's very important, and that's when you really take your investing decisions seriously. I mentioned I think Terry Smith as well. He runs the fund Smith in the UK. I think he's another manager who has shown ample skin in the game, and again that means he takes his stock picking much more seriously than I think the average fund manager. And it's no surprise actually that a lot of these managers with deep skin in the game are actually the ones that outperform the broader market. I just like to point you out to this article I picked out. It's on Fool.com. It's written by another writer I respect quite a bit. He's called Brian Stoffel. He's on the Motley Fool team. This is his name. And yeah, so he was talking about a person called Nassim Taleb. Nassim Taleb has written this book called Skin in the Game. And so you can read this article later, and I'll leave the link in the description as well. So basically, I think it's very important, if you are reading articles from people who are writing about stock, is to check whether they actually have skin in the game. And that's what Brian Stoffel mentions here as well. And I think another thing about skin in the game is when you do have skin in the game, you tend to keep things simple. You're not trying to complicate things or obfuscate the truth or make it obscure or something like that. Basically, you want to get to the core of the truth because it benefits yourself, right? And then of course, when you explain it of course benefits other people as well. So it leads to simplicity as well, and I think that's very important in investing actually. Investing is simple, I think, but it's not easy. It takes a lot of research, takes a lot of reading, and so on. So generally, I think listening to people on TV or even a lot of the writers who talk about stocks is a bad idea. You want to listen to people who have skin in the game and have an interest aligned with yours. In terms of the real money portfolio, I think the account size increased a little over the last few days. Generally, the stock market has been going up. I don't think anything significant has happened. There were a few events. I think there's a consumer electronic show going on. So a lot of the tech companies are showing off their latest items and products. I think Google and Amazon have a very big presence there, and then you should also go and look up some of the interesting devices that have been on display at that event. I think one of my stock picks, Intuitive, published some preliminary results. I think generally they were quite positive, so you saw the stock actually go up. I think sorry, nearly 7%. So that's how that panned out for one of those stock picks. I saw something about Jeff Bezos getting a divorce, and I saw a lot of actually commentators talk about that. Now, I think that's something very personal to him. Of course, I admire Jeff Bezos, and of course, he's the richest guy in the world right now. But I don't think the fact that he's getting a divorce should really be much of a factor when you're choosing, for example, Amazon as a stock pick. Basically, like Peter Lynch says, you want to buy a company that even an idiot can run. So it doesn't really matter whether Jeff Bezos is there or is not the CEO anymore, actually, or whatever. Basically, the company must have a very strong moat, and that moat should be growing, and that should be the critical factor behind choosing a particular stock. So I think things like what Jeff Bezos does in his personal life, those kind of things belong in a tabloid column, and not really in serious stock discussions. I don't expect anything major to happen in the next few days. So generally, the stocks you see on the screen, these are stocks that are going to be held for the long term. I do intend to put in a bit more cash over the next few weeks or so, and next month, of course. So generally, the account size will also increase. And if you have any other suggestions on this channel, please let me know. I look forward to hearing all your comments and suggestions. Thank you and have a good day.